What up, folks? On the check-in. Something crazy is supposed to happen today. At least that's what social media, they get us into these modes where we think, oh, it's going to happen on Tuesday. Oh, it's going to happen on this day, that day. When all you need to really follow is the basic scale of 100. If it has a price, it respects the scale. So that's one of my biggest priorities of the channel, is to get you to focus in on the gauntlet. If there's something going on, you should see it within the gauntlet. The dollar dropped. Look how big the candle is. Okay, so a supply of dollars is what makes the dollar fall. Spending those dollars makes the dollar elevate. Supply and demand, right? Specific to the dollar. The 10-year yield, well, the dollar is the value, right? The value drops when you supply more dollars in the trillions, right? Because that's what they do. They print trillions. And they spend trillions around the world, not just in the U.S. But the 10-year yield is the cost to borrow that dollar. And you see it's spiking. It's getting more expensive to borrow less valued dollars, is what I've been explaining from gauntlet to gauntlet. Now, every time there's a crazy news event or something to that effect, you want to come in here and look at the 10-year yield. You want to look at the dollar, right? And then we see the Japanese 10-year yield, because the Japanese 10-year yield is opposite of the rest of the world. Japanese is raising their interest rates while everybody else is cutting their interest rates. Yet all interest rates seem to be going up on the long end, the 10-year. The Federal Reserve, they only control short-term interest rates. So it's good to know that moving forward. We come in here and we can do the analysis at the snap of a finger while everybody else is spending an hour on it. We could come in here and do it in 10 minutes and less, right? So we go to the VIX. We see a spike in the VIX. When the volatility index for the stock market, right, when it goes up to 50 and 60, then you're going to see the stock market crashing. What they want to call crashing, I call it dipping by 40%, 50%. The stock market. If the S&P 500 is at 7,000 like it was, then if it drops by 50%, it's going to 3,500. That's 50%. That's a crash, right? Dropping by 10% is not a crash. So I'm getting you into line with the alignment of the truth, because once you have that, then you can build on that. It's when you listen to all this social media trash that gets you steering to the left and steering to the right, when you should be going straight down the middle with the facts, with the truth. You can visualize the truth on your own. We all have access to the charts. So that's what I'm giving you, the correct things to look at. So let's go to the fear and greed index. We see that the fear and greed for the stock market is in greed, right? We want to see extreme greed. Once it gets to extreme greed, the market should be spiking to the upside and people are buying at the top of the structures when you should be looking at selling. The fear and greed is the sentiment of dumb money. Dumb money will buy in extreme greed. That's why it's called greed. And then they buy up there, and then it comes back to extreme fear. And because they bought way up at the top, by the time it gets down to extreme fear, they're selling and jumping out and saying, oh, I hate the stock market and I need to get out. And nobody needs to be messing with the stock market because it's a scam. It's a pyramid scheme. You be hearing all that when you should be getting ready to buy at extreme fear. So we see that for the stock market, and we also see that for the crypto market. They both kind of move the same. We were in extreme fear in December. The crypto fear and greed gives you that visualization because it has a chart with it. The stock market fear and greed should have a chart, but it doesn't. We don't see a chart. That's fine. but you see it on the crypto stock market. I mean, the crypto chart, fear and greed index. So that's all we really need to talk about. Everything else is just for likes and views and all that. I'd like to, I'm an analytical person. That's why I want to see the likes. I want to see my videos do what they're supposed to do. For what I'm seeing is that they're being suppressed. Nobody knows who I am or anything like that. You would want to know because I'm doing it for free. I'm giving you all the information that you need to be a successful trader or an investor. So that's what we're here for. Every day, staying on track, staying online. You see my trades. I use the basic scale of 100. I don't come and say, oh, sell the stock market. No, I don't say none of that. I don't say buy the stock market. I don't say none of that. I do what I got to do when I do it. And then you'll see my results because I use the basic scale of 100. So if I do these videos for a year straight, you'd be like, oh yeah, he's exactly what he says he is. That's all I can do for you is promote the truth. All right. While everybody else is promoting the clown show and predatory. Right. So I hope everybody's trading well. You should be because you're following the right information. You should be. We just talking about it is last year. You should be more than just talking about it this year. You should be implementing, seeing it, saying that you see it, and doing what you say that you see. If you're not, you capping, and you're gonna get what you deserve. So you know who we do it for the people, not the profits. It's the consistency and persistency of doing the correct things that wins in the market. To beat the market, you must become the market, and the market moves with integrity through its price. And if you lack the integrity, you get wrecked. And you know where you go. You go to loss review, talking about the psychology, right? You're getting wrecked. Hey.